Waste Management presented earnings last week and the stock went down about 12%. And looking at the earnings, this looks pretty interesting, with a miss on EPS and revenue. For the upcoming quarter, analysts have mixed feelings. One of the reasons why people like waste management stocks so much is because of the rock solid dividends. And I understand why, with a decent 1.5% dividend yield. And it is also growing at a solid 8%. On top of that, they have increased the dividend for 20 consecutive years. Looking at the total returns in the past 5 years, we see that waste management stock underperformed the S&P 500 by a decent amount, all because of recent events. So could this be the perfect time to buy WM stock? Well, by the end of the video I will give you my 3 price targets, so make sure to watch until the end. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does waste management do? WM ranks as the largest integrated provider of traditional solid waste services in the United States, operating 259 active landfills and about 337 transfer stations. The company serves residential, commercial, and industrial end markets and is also a leading recycler in North America. Diving into the earnings, we see that revenue was reported at 5.4 billion, up from 5.1 billion year over year. And to me, this looks pretty decent. The income from operations also looked pretty decent at 1 billion, up from 944 million in 2023. EBITDA margin was nearly the same, so nothing special to mention here. Net income and EPS also increased a decent amount. Overall, pretty solid earnings if you ask me. The problem for a lot of people was that revenue increased only around 5%, which is much lower versus previous years. So revenue is slowing down a lot here. Looking at the individual segments, we see that commercial is the biggest with about a quarter of the total revenue. This segment is really slowing down in revenue, but it is the only segment growing at a higher pace in total collection and disposal segment. Looking at the industrial, we see that there is literally almost no growth year over year, and it is the same with residential. The other segments aren't growing either at a high pace, besides recycling and renewable energy. But these segments represent only a small part of the business, so they don't make a big impact here. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Waste Management stock is a 79 billion market cap company. PE ratio is at 31, which means you pay a heavy premium for the stock. Later in this video I will show you my 3 price targets for WM stock, so make sure to watch until the end. Revenue is at 21 billion and in this graph we see that revenue went up in the long run. However, growth is slowing down a little bit here. Margins are going up in the long run, which is very important to me with a slow growing company. It is the same story with the EPS. To me, this looks pretty decent. Analysts have a positive feeling for the EPS in the coming years, with an average of 12% per year to a total of $10.71 per share in 2028. For the revenue, it is also looking pretty interesting. Analysts expect 6 to 7% growth in the coming years, which to me looks pretty decent. Return on assets is sitting at 7.7%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at almost 10.5%, which is a great number. It is also slightly higher versus the 5-year average, which is something that I really like. Current ratio is a little above 1, which is a decent number. Nothing really special to mention here. Right now, Waste Management has 17 billion debt. I prefer companies that can pay down at least a big chunk of the total debt with the total cash. WM has 172 million in total cash, so they can't pay down a decent amount of their debt. To me, this looks pretty bad. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and a lot of things. And here we see that free cash flow is going up in the long run, which is looking pretty good. But it is not really steady and consistent, so keep an eye on this number as well. Shares outstanding, which is something that I really like, are decreasing. But you could argue if this is the smartest thing they could do with the share price at a premium. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.5%, which is a decent number. Annual payout is at $3. Payout ratio is around $42, and I prefer 50% or lower. So right now they have 58% left in cash to buy back shares, pay down debt, do acquisitions, and a lot of things. The 5-year growth rate is at 8%, which is a great number. On top of that, they have increased the dividends for 20 years in a row, which is pretty impressive of course. In here, we see the dividends paid since 2014. You see that WM did increase the dividends at a decent pace. Over a longer period of time, this really adds up. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here, we see that payout ratio is somewhat steady between 40 and 55%. In this graph, we see the expected dividends in 2024, 2025, and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a similar rate versus previous years. And overall, the dividends look really good to me. But how about the historical return? I decided to compare waste management stock with the overall market. In this case, the S&P 500. Next to that, I added RSG. On the 5-year chart, we see that WM was beaten by the S&P 500 by a decent amount. In total, WM returned 80% including dividends, while the S&P 500 was sitting at 96%. RSG had the highest return with 127%. On the 1-year chart, it is pretty much the same story. Both WM and the S&P 500 have a similar return. But again, RSG is beating them with a decent amount. On the 6-month chart, it is surprisingly the S&P 500 with the highest return. This happened because of the recent earnings and the drop in share price. On the 1-month chart, it is the same story, but this time everyone in the list is at a negative return. Bottom line, in the past 5 years, both the S&P 500 and RSG have beaten WM. But this is also mainly driven by the recent events. So could this be the perfect time to buy WM stock? Well, let's check the price target that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 11, 12 and 13%. For the free cash flow margin, I'm putting in the same numbers. For the PE ratio, I'm putting in 20, 23 and 26. For the price to free cash flow, I'm putting in the same numbers. I'm willing to pay a premium for the biggest waste management company, but I don't want to overpay here. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, waste management stock is around $196. I hit analyze and we see a lot of red numbers. We have a low price target of $87. We have a mid price target of $121 and we have a high price target of $166. To me, the mid to high price target is the most justified here, indicating this stock is overvalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on waste management stock is that I love the company, don't get me wrong. I used to own them and I still love them. I sold around $160 if I'm not mistaken, and made around 60% of profits here. Of course I could have done a better job, since it is around $200 right now. But that's not the point. To me, they looked overvalued, and to be honest, for a company that is not growing that fast, I'm not willing to pay a heavy premium. From a dividend point of view, things look really good. It's a solid dividend payer with an impressive track record. Most fundamentals look good, besides their debt and valuations, that seems to be off. So for now, I'm waiting for the stock price to come down, and in the meantime, I will keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.